Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty end with March losses after a range-bound session. SIP contribution since the start of this financial year surpasses 1 lakh crore rupees. Israel military claims Hamas has lost control in northern Gaza even as it continues to bomb residential areas in the city. World leaders press for a ceasefire. Israel's prime minister says no ceasefire without the release of all hostages. Over 10,500 Palestinians have been killed so far, including 4,300 children.
It seems like it's business in Cipla. I don't think we're not part. It doesn't seem like we're part of any transaction.
Cipla CEO Mangbora says it does not seem like Cipla is part of any transaction. Also maintains that news surrounding a potential stake sale is speculative. Says Cipla chairman Yusuf Hamid does not care about ownership and wants the ethos to continue. Cites Tata Sons and Asian paints as examples of promoters and professional management coexisting through generations. That's an exclusive. Adani Ports reports a 28% jump in Q2 revenue, profits up over 4%. The company says there is no adverse impact on operations at the Haifa port in Israel due to the war just yet. Shares of Disney rallied after it posted a revenue of over $21 billion and plans to cut costs by an additional $2 billion. But Disney's India business struggles with 2.8 million subscribers leaving Disney Hotstar between June and September. SoftBank reports a quarterly loss of $6.2 billion, largely on account of the WeWork bankruptcy and the fall in tech stocks. Even a stellar listing of chipmaker ARM couldn't help SoftBank return to the black as it posts the fourth straight quarterly loss. The Ministry of Corporate Affairs is likely to order a probe into the accounts of automobile maker MG Motor and mobile phone maker Vivo. Sources say this probe could be part of a larger probe into money laundering allegations and tax evasion against Chinese multinationals in India. Some relief for gaming companies. The Madras High Court sets aside parts of the Tamil Nadu government law that banned online rummy and poker. Rules that the ban cannot be extended to games of skill. Upholds the industry's argument that the state can regulate but not ban. In a bid to fast-track pending cases against elected representatives, the Supreme Court directs all high courts to initiate suo motu proceedings. Calls for regular monitoring of pending trials against MPs and MLAs, asks judges to facilitate special courts and lays down uniform guidelines for such cases. US President Joe Biden and his Chinese counterpart Xi Jinping are likely to meet in San Francisco next week on the sidelines of a summit. No official announcement yet. Both nations have been trying to mend their troubled relationship over the last few months. Austin will be in India for the 2+2 ministerial dialogue. This will be the fifth high-level meeting between both nations. Commerce Minister Piyush Goyal heads to the US next week and is likely to meet industry, including leaders like Elon Musk. Well, let's start with the market action. The Sensex and the Nifty ending with March losses after a range-bound trading session. Mid-caps did manage to buck the trend, ending with some gains. So that's the story. The Nifty 50 down about 48 points. The Sensex lost 150 almost. The Nifty Bank was up in positive territory just about. The Nifty mid-cap was also in positive territory but closing flat. Mutual fund data has pointed to an interesting trend. The contribution from SIP so far in FY24 has crossed 1 lakh crore rupees. So where are the markets headed as Diwali approaches? Well, my colleague Prashant Nair spoke with a couple of market heavyweights to find out what their outlook is. Prashant, what does the road ahead look like? What's the view for the Samvat?
Well, thanks for that. Interesting conversation with two market heavyweights today. I sat down with Ramdev Agarwal, chairman of Motilal Oswal Financial Services, and Manish Chokani of Enam Holdings. And I thought it was filled with a lot of good advice, not just in the near term, but the slightly longer term as well. So what I'm doing here is just summarizing what stood out to me, the most punchiest aspects of the conversation. So here it goes. To begin with, the big talking point is, of course, politics. With both state elections and now general elections next year, a lot of debate on what could happen, right? Now, while 99% of the market is convinced that there will be political continuity, it still attracts a lot of attention. Ramdev, for example, believes that state elections are not a done deal with respect to what opinion polls are showing one way or the other. So watch out. He says that markets should rally post-state election results and they should rally all the way into general elections next year. He cited the example of what happened back in 2014. Manish's view is that markets may fall 5 to 10% if the election outcome is very adverse before recovering again. Now, with a holding period of forever, as he himself describes it, Manish Chokani is bullish on Indian markets post-elections per se. I mean, his call is, if especially there is political continuity next year, he expects $100 billion a year in inflows across FII, FDI and debt to come in. He says India's BOP payments problem, the annual rupee depreciation problem, it'll be a thing of the past. He says India will be the key momentum market and he called it the bubble market in a good way, of course. Let's talk about stocks, right? Stock bets. Ramdev's big bet is Zomato. And in sound bites that we will just play in just a bit, explained why. High ROEs and higher growth, according to him, mean that P multiples for Zomato don't have to be restrained in the traditional sense. Another sector Ramdev is very bullish on is real estate, which he believes is in the first year or the second year of a 10-year kind of super cycle. Let's wrap this up with Manish's view on financials. I mean, what can I say? He's bullish on the space, super bullish, should I say, and he argues that it has valuations on its side too. Well, that's it from me, wrapping up their views, but let's hear it from the men themselves on each of these points.
Interest rate cycle has peaked out. I think it's a too big a statement to say. I mean, yes, there looks to be some kind of a pause right now, but to say that it has been picked up, I have no view on this interest rate cycle. But one thing is for sure that what we have seen last 10, 15 years of sub-zero or zero kind of a thing where 12, 15, 13 trillion dollars of bonds, particularly in Europe, went below zero. So that era is over. You know, what it started in 80s from 15, 16% 10 year to zero. I think that one phase in pendulum is done. And now, as Howard Marks says, you know, pendulum moves all the way up. So from zero, we have come to 5.5%. Whatever happens, I don't know, but it is definitely not going to go back to zero immediately.
If we don't get $100 billion a year, I would be very, very surprised.
Okay.
And I do think in this decade, we will be the bubble market of the world.
$100 billion per year?
Per year. No,
FDI.
I said FII plus debt plus FDI. Cumulative inflow. So your balance of payment problems and the rupee depreciation is gone.
Okay.
You are the momentum market going forward in this decade. The way the world flipped on Japan with one trade of Buffett. Because everyone's acting like lemming. There is a single trade, single dimensional investing going on. I think we are setting ourselves up for that.
Okay.
It's still away. I mean, let's get the May election out of the way and then we see.
Any business which is digitally powered, has exponential growth opportunity. See, once your business model is set, and here these delivery companies, if there is one country where delivery must happen, it is India. In $50, in dead of the night, you can get a hot food delivered. I mean, they have not made money. They are just going to start making money. And mind you, they don't have any balance sheet. It's only P&L.
Right.
So everything is written off. So your ROIs are going to be like 50, 60, 100%. So once you have, see, in valuation, I mean, unfortunately, we do too much of these tables and all. So when you have a high ROE and high growth, see, the P multiples are not going to be 20, 30, 40. You're talking about 100, 150, 200.
And you'll catch the full conversation with Ramdev Agarwal and Manish Chokani tonight at 7 p.m. right here on CNBC-TV18. Well, speaking of newsmakers, the big exclusive this evening, Cipla CEO Umang Vohra says, and I quote, "It does not seem like Cipla is part of any transaction," end of quote. Speaking to CNBC-TV18's Ekta Batra, Vohra also maintained that news surrounding a potential stake sale is speculative, adding that Cipla's chairman Yusuf Hamid does not care about ownership and wants the ethos of the company to continue. He also cited Tata Sons and Asian Paints as examples of promoters and professional management coexisting through generations. Take a look.
There's been so much speculation about whether or not Cipla is on the block, whether the deal will go through. What can we expect? I know you're a part of the company and not a part of the promoter entity, but can you clear the air for us?
Yeah, I mean, I'd love to. Whatever we do is public. The companies maintain that this is a speculative speculative sort of information that's around in the marketplace. The company doesn't comment on it. The promoters have not commented on it. We respond to what we do as a company through various statutory, announcements, etc., there has been none, right? As of 2 days back, we also opened the window for our employees. So I think people could infer, right, that things are, based on all of this, that, it seems like it's business in Cipla. I don't think we're not part, it doesn't seem like we're part of any transaction, otherwise we wouldn't have opened the window.
Okay, but what about the future of Cipla? Because Dr. Hamid obviously must be thinking about what he wants to do next.
Yes.
And where he wants to leave Cipla. What do you think is probably the most feasible option for him, or what he's most comfortable with? A PE, a promoter entity, or maybe the second generation running it?
I think it's difficult for me to, try to unravel the depths of Dr. Hamid's experience, mind, thinking at this point in time. I can only tell you what I pick up, right, from him. I think he's most concerned about Cipla, right? And it doesn't matter to him, at least the way I've understood, about ownership. He just wants the ethos of Cipla to continue. And to a certain extent, he's relying tremendously on the management team to continue to do that. And, he's pointed out several examples to me of how companies such as the Tata Sons, how companies such as Asian Paints, these continue to coexist through generations of promoters and generations of management, right? And so in a sense, it's not Dr. Hamid's problem anymore. The way it's been told to me, it's become my problem now to ensure that the company continues to survive, continues to live, has succession of people in the management side. And as much as he plans for succession on the ownership side, I have to plan for succession on the management side. So it's a dual problem, and I think we're rested with it.
Well, that is an important interview there with Umang Vohra. You can catch that conversation with Cipla's CEO at 5:30 p.m. and 10:30 p.m. right here on CNBC-TV18. Well, we are going to have to infer from what Umang Vohra has said, essentially saying that, the possibility of a takeover is speculative, of the promoters selling stake is speculative, also suggesting that now that the trading window stands open for Cipla's employees, it does leave a question mark on whether there is any potential transaction on the anvil as of now. But as I said, these are Umang Vohra's words, and we will need to watch this space very, very carefully. Staying with earnings, Adani Ports posting more than a 27% growth in its top line for the second quarter. Net profit rose more than 4%, while margins expanded more than 60% on an annual basis. The company's cargo volume grew 14%, which was largely led by improved operational efficiencies. Pidilite Industries intends to pilot its NBFC business in just one region for the first 6 to 9 months. That's the word in from the company's managing director, Bharat Puri. Speaking to CNBC-TV18 earlier today, Puri said that Pidilite will keep its lending business separate from its core business. Listen in.
This is where we have, in our view, a massive competitive advantage by just the nature of the information and the relationships we have with this ecosystem. And that, therefore, that's what we're going to do. And again, to confirm this, we will first actually just pick one small geography for the next 6 to 9 months. Actually, in that geography, test all of our assumptions, see their work. We will be in a position, much better position to answer your questions, both on risk profile as well as management bandwidths. But frankly, we don't see that as an issue because all of these people are known people. This is not a new business for us. There is nobody new that we will be dealing with in this business.
Well, that's Pidilite foraying into the lending business. In global earnings, SoftBank reporting a loss of $6.2 billion in this quarter. This is the fourth straight quarter in the red, largely due to the WeWork bankruptcy, as well as a fall in tech stocks. SoftBank's Vision Fund has suffered an investment loss of close to $4 billion in the first half of this fiscal year. But for the second quarter, the Vision Fund has reported an investment gain of over $1 billion. That's SoftBank for you. Disney beating street expectations in the September quarter, boosted by strong growth in its theme park business and profits from ESPN+. However, a decline in ad revenue has weighed on the top line. The mass media giant also increased its cost-cutting target to $7.5 billion. Speaking to CNBC, Disney CEO Bob Iger said the company would like to stay in India, but remains open-minded about its prospects.
You said that you're looking at all of your assets. Do you have plans to sell your India assets, India Hotstar assets? Any update there?
I don't have an update. I'd say the same thing about them that I said about our linear networks. We're looking in an open-minded way. We like being in business in India. We'd love to be able to strengthen our hand. I can't, at this point, predict where that will end up.
Well, that is Bob Iger not categorically saying yes or no as far as the sale of its India assets are concerned. Now, Disney Hotstar continues to struggle. The streaming platform has lost nearly 3 million subscribers in the September quarter. Manglam is standing by now with a snapshot. Manglam.
Well, that's right. Even as the Walt Disney Company shares were higher in after-hours trade on account of the company's profit beat and the $2 billion cost-cutting program the company's announced, the underlying trend for their Indian OTT app, that's Disney Plus Hotstar, is not pretty rosy. In fact, between June to September, the quarter, the company lost nearly 2.8 million subscribers for Disney Plus Hotstar. And that's not all. In fact, from last September to this itself, the platform's lost almost 2.5 crore subscribers. The overall base of the subscribers has also halved from nearly 6.1 crore to close to 3.7 crore subscribers. Now, the biggest chunk of these subscriber losses happened in the IPL quarter, which was the March to June quarter. And in that quarter, nearly 1.2 crore subscribers deserted the platform due to the lack of IPL on Disney Plus Hotstar. The trend for September to December quarter, the quarter that we're currently in, doesn't look good either, despite the roaring success that we've seen of the ICC Cricket World Cup. And that's largely because despite concurrent viewers of over 4 crores in a bunch of matches, etc., the World Cup streaming is free. So one doesn't really need to subscribe to the platform to watch the ODI World Cup. Earlier, the subscriber losses were on account of the lack of IPL, lack of HBO content, and stiff competition coming in from Jio as well. And now, the free content, which includes the more popular Coffee with Karan as well, would entirely eliminate the need for subscription itself, so further causing a dent in Disney Plus Hotstar's overall subscriber numbers. And it'll be an interesting trend to watch out for, not just for them, but for the entire ecosystem as well. Earlier, there were reports of Disney Plus Hotstar being on the block. Let's see how this one pans out.
Mangala, many thanks for joining us. We will head into a break, but up next, the Madras High Court sets aside parts of the Tamil Nadu government's law that banned online rummy and poker. The court rules that the ban cannot extend to games of skill. That and more when we return. Genpact has announced that CEO NV Tiger Thiagarajan is set to retire on the 9th of February 2024, ending his 19-year stint at the company. The board has appointed Balakrishnan Kalra to take over the position. Kalra currently heads Genpact's financial services and consumer healthcare businesses. On to a CNBC-TV18 exclusive. The Ministry of Corporate Affairs is likely to recommend a detailed investigation into the books of MG Motors and Vivo. Sources tell CNBC-TV18 that the Registrar of Companies has alleged that these firms funneled money to their Chinese parent companies. Timsy joins us now with more details. Timsy, take us through where things currently stand and what is likely.
Well, that's right. Sources have told CNBC-TV18 that the Ministry of Corporate Affairs is soon likely to recommend a detailed investigation of books of accounts of MG Motor India. The investigation is being ordered on the basis of the report filed by ROC on the preliminary inquiry it had undertaken. According to sources, ROC in its report submitted to the ministry has alleged discrepancies in financials and fund movement. Just to remind our viewers, JSW Group and Shanghai-based SAIC Motor Corp are set to be in final talks to pick up a significant stake in MG Motors India. It is not just MG Motors India, but MCA is also likely to order investigation of accounts of mobile phone maker Vivo too. Meanwhile, CNBC-TV18 has reached out both to MG Motors India and Vivo for a comment, and company comments are awaited. Let's see what is in store for both the companies.
All right, Lindsay, appreciate you joining us. The Bombay High Court has directed the Income Tax Department to refund 1,128 crore rupees to Vodafone Idea for taxes paid for the assessment year 2016-2017. The High Court ruled that the assessment order passed in August this year can't be sustained as it was time-barred. The two-judge bench also recommended a detailed inquiry against the assessing officer for not passing the final order within the mandated time. Now, the Madras High Court has ruled that Tamil Nadu's ban on online gaming and gambling cannot extend to games of skill. The court has upheld that while the state can regulate online games, it cannot impose a blanket ban. Ashmit joins us now with the details. Ashmit, so relief for online gaming companies, specifically in the state of Tamil Nadu, but overarching for the online gaming industry, this is a temporary or partial relief because the larger issue of GST at 28% continues to sort of hang in the air, and the government has chosen not to distinguish between chance or skill when it comes to GST.
Well, indeed, the courts have made that distinction between the games of chance and skill, not the government, at least not yet. And that is, of course, the larger issue on how these games are to be treated on the regulatory battlefront. GST regime and the treatment, of course, has resulted in massive burden in terms of demand that have been raised against them. But at a micro level, with respect to the Tamil Nadu government itself, which had come out with legislation called Tamil Nadu Prohibition of Online Gaming Act. And under that act, online rummy and online poker was made punishable, was banned. Now, that is what was subject matter of this challenge before the Madras High Court. The High Court, importantly, has decided in favor of the gaming companies. It has partly struck down this piece of legislation by saying that this restriction, this ban that has been introduced, can only extend so far as the games of chance are concerned, not games of skill. So importantly, this ruling that was given by the Apex Court, again being upheld here by the High Court, again being respected, and again reiterated here that there is a distinction to be made between games of chance and games of skill, and that is the distinction that has been brought about as a piece of this legislation. What the High Court has held, that yes, indeed, there can be regulation, but for a wholesale ban to be introduced in such a manner, not tenable under the current law. So yes, a victory for Tamil Nadu as far as Tamil Nadu government is concerned. The broader questions, of course, still remain.
All right. Thanks very much, Ashmit, for joining us. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC-TV18. The news continues right after this.